Good evening, TheoTrade. This is Coy Rosenblum, and you're watching the Theo Nightly video for the 6th of June, 2019. And we're talking tech bouncers. Before we start talking our tech names, let's get a sense on the broader market. We'll start with the S&P 500 in the S&P futures right here. And we see this bounce off of the 2731, 2732 gravity spot. That's the midpoint of this little sell swing back in October 2018, and that's giving us a little bit stronger of a bounce that we saw at the end of last year. So that's our focal point. We'll also be talking about touch and goes or trick a traps, and that's when a market hits a bigger picture support level and then goes under it. That puts a lot of stop losses and short sellers in motion, and then it goes the other way. That's what's happening right now. So as we look at these tech names, mainly on Facebook and Google and some others, we'll make a note of these little trick-a-traps, or bear traps in this case. Get the bears in, squish them out with stop losses. So as we put any positions on, manage positions, in-out spreads, bull call spreads, or anything else that plays off of bigger picture support levels. And the S&P is already in a big bounce. We can see that playing out also in the Nasdaq. And how do we do this? We're not looking that much at indicators or deep level technical analysis and things, but it's just the price levels. So for the Nasdaq, we'll see this play out as this trick-a-trap thing. 7,000 has been a key downside target, and that's been in play since this October 2018 sell-off and this May 2019 sell-off. That's consistently with what we're looking at in the nightly videos in prior sessions. Well, we're here. Is this the end of it? Probably not. But right now we're seeing a bounce, just like we saw over in the middle part of October. So if the market is to fall and go beneath these points, these will be very clear breakdown or sell signal position plays to the downside. But markets don't go straight up and they don't go straight down. So as we start the month of June, really continue through the first week of June, we're seeing the markets bounce just like they did in October 2018. So now let's start with the broader XLK. We can see that it's similarly bounced up away from its 200-day simple average. And that goes back to the middle part of 2018 and pushes us forward really here in March and then now into June. A little trick-a-trap. A trick-a-trap once again is a market hitting a key level, falling beneath it, and then surging up away from it. In a perfect world, those things would never happen. But our trading world, not so perfect. It's all about supply, demand, and probabilities. So now we see the market pushing up away from the 70 per share level in the XLK. Microsoft, similarly, we've discussed this 120 per share level in Microsoft, and we have this uptrend in motion. There is your trick-a-trap, which is a push just beneath it, and then this 1, 2, 3 day big surge up away from it. It is similar but actually stronger than what we saw at the latter part of April. So now we're looking for Microsoft to play up into about 130 per share at best. If this goes above here, that's a whole other conversation. But if you are playing in-out spreads or any type of bullish positions off of this pivot, we're getting close to the target. So there's no trade right now. If you are in positions, look to take the positions off in the profit zone and potentially look to get short or get a put position on into this 130 per share level. That may also include selling calls above this resistance pivot. Facebook gives us a good bounce. Now this is what should happen. We've been looking for Facebook, if it fell beneath this 179, 180 per share pivot, to fall all the way to that 200 simple moving average, which is a prior price zone that takes us back to earlier in 2019. Well, we're seeing that. So this is how we play short-term movements on the intraday basis. That was a stellar trend day to the downside that's been met with 2 to 3 days of upside action up away from the 160 per share level. So that does allow for some bullish plays on the short term, or with options, with vertical spreads, or even in-out spreads to play a directional move away from 161. So Facebook is getting into that spot. We'll look for it to trail into at least 175, and if above 175, we have higher levels for Facebook shares. Amazon gave us the trap. There's a lot of lines on this chart, so don't let that mislead you, but we're looking specifically at this zone. The zone from about 1,700 per share, or 1,700, which became a resistance point or a key pivot point. Shares broke above it and traded up through the 1,900 per share level, and then now have fallen, as would be expected, down to the prior pivot. Now we're getting a little push away from it. So watch carefully at this 1,800 per share level, and that's a little departure play or bullish bounce play that is already in motion. Apple gave us another decent pivot or reversal up away from the 170. And again, the concept is break support, expect the stock to trade lower, and that gives us reasons to play short into an open air zone or through a drop zone to key levels in the future. So we're seeing the bounce. Didn't quite happen at 180. That little logic would have suggested a bounce off of that level, but there is what we call the trick-a-trap. It tricked you and trapped you. If you got short or tricked and trapped, maybe not you, but a lot of traders. And that resulted in positions short, and then immediately on the break above, bullish exits or stop losses. If you did not get short, that's how we build trades into this surprise outcome or the bounce outcome. It's the basic logic of a bear trap, which is happening here, or a bull trap, which we can maybe talk about here. The market breaks to new highs and then turns the other way. Similarly into September and October 2018. And that's the basis for how we're comparing what's happening now to what happened at that point. So Apple similarly is getting a bounce up maybe to 190 or even 195. A couple more. Netflix has its own bounce, looking to go long off of support, take profits into resistance that fell just a little bit shy of 380 per share, and then back down. There is the trap. There is the false breakdown. This is the rally or surprise movement that occurred up away from, in this case, about 330 per share, but the key pivot was roughly 342.50, and that leads to an upside play with a little bit more room to run, just shy of 380. Google has been interesting that its earnings took it on a big breakdown, way lower than expected. The expected spot was about 1,100, and that's taken us to 1025. And that is the pivot point we've had in the past off of these prior levels, prior lows. So unless we see Google shares under 1025, we have potential bearish plays beneath 1025, 1,000, and really a lot lower than that. But until that happens, we'll expect a bounce or a push back inside to fill in this gap or fill in this spot. So carefully watch the next move, which is a triangle, if we get an upside break really beyond 1050. And that leads to some bullish positions in Google if you want to take them. And we'll finish up with one little stock, NVIDIA, which had a stellar sell-off, really a collapse, from about the 300 per share level all the way to 120. That's magnificent in terms of price movement. Stellar move, and that's a reason why we like to use option positions as opposed to buying or even short selling the individual stock itself. With an in-out spread, with a bull call spread, if we lose on the downside, or a bear put spread, we know our risk in the position and how much we can make. So overnight gaps or surprise movement one way or the other shouldn't be too stressful for us. Now we're looking for a bounce up away from this 132 per share level into maybe the 161 or 160 level. In my swing trades and option positions, I like to keep things simple and just look for spots and markers and movement from something to something else. And that guides my decision of selection of the stock, selection of the strategy, and of course when to take profits and when to exit positions that break support levels. But as always, these just give us an overview of potential support candidates and maybe some bullish plays as we go through the beginning of June 2019. As always, be careful and safe. This is Corey Rosenblum with your TheoTrade video for June 6th, 2019.